Everyone's buying Nvidia right now, and I completely understand why. The stock's up over 700% in just 2 years. But here's what nobody's telling you. Nvidia's easiest money has already been made. The massive gains, they've happened. Today, I'm going to show you 3 AI stocks that could actually deliver bigger returns in 2026 than Nvidia. And I'm not just going to hype these up. I'm going to prove it with actual numbers and real data. These 3 companies are about to flash on your screen. So let's get straight into it. Look, I need to be clear about something up front. Nvidia is an absolutely incredible company. We're talking about a $2 trillion market cap. They control roughly 80% of the AI chip market, and they're genuinely printing money right now. But here's the issue that most investors aren't considering. At 50 times earnings, Nvidia needs absolutely perfect execution just to justify its current share price. Think about that for a moment. They need everything to go right just to stay where they are. Meanwhile, there are companies actually using Nvidia's chips to build the real AI applications that are going to transform our world. And Wall Street is completely ignoring them. These are companies trading at fractions of Nvidia's valuation, but positioned in the exact same growth trend. These are my 3 picks for 2026. And before we dive deep into each one, I've put together a complete analysis document with every number, every chart, and every risk factor I'm covering today. That's linked in the description below. Completely free for you to download and review at your own pace. Stock number 1 is Palantir Technologies, ticker symbol PLTR. And I already know what some of you are thinking right now. You're saying Palantir, that's not undervalued. That stock's already run up massively. Just stay with me for a few minutes, because I'm going to show you something that changes the entire picture. Here's the fundamental thesis that most people are missing. While Nvidia sells the physical chips, the actual hardware, Palantir, is selling the brain. They're selling the intelligence layer that sits on top of all that computing power. Their AIP platform, that's their artificial intelligence platform, is literally how major corporations and governments actually use AI in the real world. This isn't theoretical. This is happening right now across hundreds of enterprises. Let me show you what fundamentally changed for Palantir in 2024. Their US commercial customer base grew by 77% year over year. That's not a typo. 77% growth in paying commercial customers. Their revenue growth hit 30%. And here's the kicker. They're doing this while being genuinely profitable. They're not burning cash like typical growth companies. And they just secured over $1 billion in new government contracts, which provides an incredibly stable revenue base that most tech companies would dream of having. Think about it this way. Nvidia sells you the engine for your car. Palantir teaches you how to actually drive it, maintain it, and get maximum performance from it. That's the difference we're talking about here. Now let's talk numbers and do a direct comparison. Nvidia currently sits at a $2 trillion market cap. For Nvidia to double from here, they need to hit $4 trillion. That would make them worth more than Apple and Microsoft combined. Just think about how difficult that is to achieve. Now look at Pat. They're currently at roughly $150 billion market cap. Palantir could triple to $450 billion and still be smaller than Nvidia is today. Which scenario sounds more achievable to you? Which one has more room to run? Now I'm not going to sit here and pretend there's no risk, because there absolutely is. The bear case against Palantir is straightforward. The valuation is high, roughly 40 times sales, which is expensive by any measure. If their growth rate slows down even slightly, if they miss customer additions for even 1 quarter, this stock will get absolutely punished by the market. But here's the flip side. If they keep adding enterprise customers at this current pace, if they keep converting their AI platform trials into paid contracts, this could genuinely be a $500 billion company by 2020. Stock number 2 is Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. And this is genuinely the hidden play that almost nobody in the mainstream financial media is talking about. This is the secret leverage play on the entire AI boom. Here's what you need to understand. Nvidia doesn't actually manufacture their own chips. They design them, absolutely, but they don't make them. Taiwan Semiconductor makes them. Every single H100 chip that's generating billions in revenue for Nvidia, every chip that's powering ChatGPT and AI data centers around the world, Taiwan Semiconductor manufactured it in their foundries. They're the ones actually producing the physical product. But it gets even better than that. TSM doesn't just manufacture for Nvidia. Apple's iPhone processors. TSM manufactures those AMD's AI chips that compete with Nvidia. TSM makes those too. Qualcomm, Broadcom, virtually every major semiconductor company in the world. They all rely on TSM's manufacturing. Taiwan Semiconductor has an effective monopoly on cutting-edge chip manufacturing below 7 nanometers. Nobody else in the world can do what they do at their scale and precision. Let that sink in for a moment. Now here's where it gets really interesting from a valuation perspective. Nvidia trades at 50 times earnings right now. It's priced for absolute perfection. Taiwan Semiconductor trades at just 20 times earnings. Read that again. Same AI boom, same explosive demand for chips, same growth trajectory in the industry. But Taiwan Semi trades at less than half Nvidia's valuation multiple. Why? Because the market is worried about geopolitical risk with China and Taiwan. But here's what changes that equation. TSM is currently building 3 massive fabrication plants in Arizona and the United States. They're investing $40 billion to bring advanced chip manufacturing to American soil. The so-called Taiwan risk that everyone worries about. It's actively being solved right now. These Arizona plants will be producing cutting-edge chips on US territory within the next 2 years. Let me put the growth opportunity in perspective. AI chip demand is projected to triple by 2027, according to multiple industry analysts. Taiwan Semiconductor manufactures 90% of the world's advanced chips. If demand triples, and they maintain anywhere close to that market share, what happens to their revenue? What happens to their stock price? This is genuinely one of the most obvious AI plays that nobody's talking about because everyone is distracted by the shiny Nvidia headlines. The risk here is straightforward, and I'm not going to sugarcoat it. Geopolitical tension between China and Taiwan is real. If something serious happens in that region, if there's a military conflict or a blockade, this stock will crash. That's not fear-mongering. That's just reality. But here's the thing. That geopolitical risk is precisely why the stock is cheap. That discount is your opportunity. If you believe that risk is overblown or being managed through their US expansion, then TSM at 20 times earnings is an absolute gift. Stock number 3, and this is genuinely my personal favorite of the 3, is Cloudflare, ticker symbol NET. This is the purest AI infrastructure play available on public markets right now, and most investors have no idea what this company actually does. Let me explain the thesis here because it's brilliant in its simplicity. Think about how AI actually works in the real world. When you use ChatGPT, when someone generates an image with Midjourney, when any AI application serves millions of users simultaneously, 3 things absolutely must happen. First, you need massive bandwidth to handle all that traffic. Second, you need global edge servers positioned around the world to ensure low latency, because nobody's waiting 5 seconds for an AI response. Third, you need serious security to protect against attacks, bots, and malicious traffic. Cloudflare provides all 3 of those things. They're not building AI models. They're building the pipes that make the AI internet actually function. Here's a stat that should blow your mind. 20% of all web traffic on the entire internet runs through Cloudflare's network right now. 1 in 5 requests goes through their infrastructure, and their AI-specific products just launched last year, which means we're at the very beginning of this growth curve, not the end. Let me show you what happened for Cloudflare in 2024. Revenue growth hit 32%. They're a large customer base. Those are customers paying over $100,000 annually. That grew 34%, and they generated $400 million in free cash flow. And that number's accelerating. These aren't projections. These are actual reported results. Now here's where the valuation story gets really compelling. Cloudflare trades at roughly 10 times sales right now. Let me compare that. Palantir, which we just discussed, trades at 40 times sales. Nvidia trades at 30 times sales. For a company growing at the same pace as both of them, Cloudflare is trading at 75% cheaper than Palantir. Think about that disconnect for a moment. Same growth rate, fraction of the valuation. But here's what really excites me about Cloudflare's future. They just launched 3 products that could completely transform their business. Workers AI lets developers build and deploy AI applications directly on Cloudflare's global network. Vectorize provides AI database storage at the edge. AI Gateway manages and optimizes AI traffic. They're not just benefiting from the AI boom. They're actively building the critical infrastructure that AI applications require to function. They're positioning themselves as the foundation layer for the next generation of internet applications. The bear case here is also straightforward. Cloudflare is still unprofitable on a GAAP accounting basis. They're investing heavily in growth and infrastructure. If interest rates stay high and growth stocks get crushed in a broader market sell, Cloudflare will likely fall first and fall hard because it's still in that growth at all cost phase. But here's the counter-argument. If AI infrastructure spending explodes over the next 3 years, the way every major analyst expects it to, if companies pour hundreds of billions into AI deployment, Cloudflare is positioned to capture a massive portion of that spend. Under that scenario, this could genuinely be a five-bagger by 2027. All right, let's put all of this together and compare these opportunities directly, because I know some of you are wondering which one to actually buy. Nvidia is the established leader. It's the safest pick of everything we've discussed. But you need them to go from $2 trillion to $4 trillion in market cap just to double your money. That's an enormous amount of capital that needs to flow into one stock. Palantir has the highest growth rate of the group. It's also the most expensive on a valuation basis and carries the highest risk-reward profile. If they execute, this could be a 3 or 4 bagger. If they stumble, you could lose 30 to 40% very quickly. Taiwan Semiconductor is the manufacturer. They have the cheapest valuation multiple and the most established business model. The geopolitical risk is real. But if that gets resolved or proves overblown, this could easily double while being much safer than the other two. Cloudflare is the infrastructure play. It offers the best value relative to growth, but it needs to prove it can actually turn all that revenue growth into real profitability. The potential is enormous, but there's execution risk. Here's how I'm personally thinking about portfolio construction with these names. If you want safety and sleep well at night, buy Nvidia and Taiwan Semi together. You get the chip designer and the chip manufacturer. You're covered on both sides of the equation. If you want maximum growth and you can stomach volatility, Palantir and Cloudflare give you the highest upside potential. Probably 3 to 5 times your money by 2027 if things go right. But you'll have to endure some serious drawdowns along the way. My personal portfolio, I actually own all 4 of them. I own Nvidia, Palantir, TSM, and Cloudflare. Because I don't believe I need to pick just one winner. I'm diversified across the entire AI value chain, and I am letting the trend do the heavy lifting rather than trying to perfectly time which specific company wins. Now look, I need to be absolutely clear about something. Nothing I've said today is financial advice. I'm not a licensed financial advisor. You need to do your own research, understand your own risk tolerance, and make decisions based on your personal financial situation. What I've given you today is my analysis, my perspective, and how I'm thinking about these opportunities. But I've put together a complete analysis document with every number, every risk factor, every chart I showed you today. That's linked in the description below, completely free. There's no paywall, no email, sign up. Just download it and use it for your own research. And if you want me to analyze your stock portfolio or break down a specific company you're reconsidering, drop it in the comments below. I read every single comment, and I genuinely try to respond to as many as I can. Hit that subscribe button if you found this breakdown valuable, because we're going deep on real investment opportunities in 2026, not just chasing whatever's trending on financial Twitter. I'll see you in the next video.